What's up, guys? In this video, I'm going to share with you my top 5 ETFs for long-term investments that tracks most popular benchmarks. So if you just started your investment journey and looking for ways to grow your small account into the larger account with minimal risk and low cost, then you may want to continue watching this video. Please stick around to the end of this video where I will share with you a comparison table of top ETFs for long-term investment and what your capital growth could be with each option in 10 years so you can choose the best for you. Before we jump into details, I do want to mention that I am not a financial advisor and you need to do your own research, do your own due diligence before any investment you make and make sure that you understand all risk associated with that. And this video is only for educational and entertainment purposes, guys. Let's quickly start with what exchange traded fund is. You can imagine ETF as a basket with many companies in that basket. And it might be hundreds or thousands of different companies in one ETF. And that allows you to be easily exposed to many companies with only one share or even a fraction of one share. Now let's clarify why you may want to consider ETFs for long-term investing. And I have 5 reasons for you to use ETF as a foundation for your portfolio. And first one is diversification that allows you to minimize the risk. ETFs give you an efficient way to diversify your portfolio without having to select individual stocks, make deep research, and analyze for particular companies. Diversification leaves you less time to suffer big losses if something bad happens to one or two companies in the index. Two, flexibility and especially trading flexibility. You can trade ETF like stocks, meaning you can trade them anytime during market hours at market price or limited price. Three, these ETFs have extremely low cost and zero trading commission with the majority of brokerages. Fourth, transparency. So these ETFs disclose their holdings and hold the same securities as the specific index or benchmark they track. Five, you don't need a minimum amount to start investing. You literally can start with a $5 and buy a fraction of ETF. Also important to remember that most investment professionals cannot beat the stock market, and nearly 90% of actively managed investment funds fail to beat the market in long run. And portfolio managers are often educated investors who spend their entire workday attempting to outperform the stock market. And if investment professionals cannot consistently beat the market, it is unlikely that the typical at-home investor with a part-time involvement, would achieve better results. So these are my reason behind this selection. There are more than 2200 ETF. Obviously, it is difficult to decide which of them are best buy right now. And I did some research and put a short summary for your convenience. And I am going to use these metrics explaining each ETF. Market capital or net assets, expense ratio, dividend yield, trade volume, number of companies, and returns for different years, and risk associated with that. I choose 5 benchmarks and 1 ETF for each. Let's start with less risky and go one by one. Total US bonds market. My ETF winner for this category is Vanguard Total Bond Market ETF with the ticker BND. Expense ratio for this ETF is very small, 0.035%. The risk potential is very small. Less risk, less reward. Yeah, and you can see on this chart performance reward is around 4%, 3%, 4%, 4%. This is very diverse and more than 10,000 bonds in this ETF, and total net assets is almost $300 billion. So this is a great way to start and balance your portfolio with less risky ETF. Global stock market. My ETF winner in this category is Vanguard Total World Stock ETF with the ticker VT. This one has exposure to foreign and US stocks with also very small expense ratio, 0.08%. And this one is more risky. As you can see from the chart, performance is pretty amazing comparing to the previous one, almost 60% for the last year, so that was amazing year. And 3 years average bit more than 12%, 5 years 13%, 10 years almost 10%, and since inception in 2008 it is almost 8% average grow. Portfolio composition, as you can see, majority here, 60% is North America companies, but also you have exposure to Europe, 16%, different emerging markets, 11% Pacific region, 12%, and some other region as well. And the number of stock is more than 9,000 companies in this ETF, so this is a very diverse one. The total net assets here is a bit more than $27 billion. 10 holdings is a bit more than 30% from total. Top 10, Apple, Microsoft, Amazon, Alphabet, this is Google, Facebook, Tesla. Okay, number 3, total US stock market. And my winner ETF is Vanguard Total Stock Market ETF with the ticker VTI. This one has exposure to large, mid, and small cap companies, and expense ratio extremely low, 0.03%. Risk is 4. And also you will get some dividends payments on quarterly basis, 1.29%. And you can see the returns here from the performance, and average annual one for the last year is 62%. So it's huge, but it's unusual one. Okay, let's see. 3 years, 17%, 5 years, 16%, 10 years, almost 14%, and since inception, almost 9% average annual returns. You can see this one is also very diverse one. Number of companies here is a bit more than 3,700, and total net assets $1.2 trillion. So that's huge. You can see portfolio composition by sector. So majority is technology, obvious, and industrial, healthcare, financial. Top 10 companies is 22% from total. Top 10 companies: Apple, Microsoft, Amazon, Google, Facebook, Tesla, and so on. So it's pretty the same. Next category is S&P 500 index that represents approximately 80% of the total value of the US stock market. My ETF winner in this category is Vanguard S&P 500 ETF with the ticker VOO or WOO. This one is invest in stocks in the S&P 500 index. So this is the top, the biggest 500 companies in US. Expense ratio here is 0.03%, extremely low on the market. And you also will get some dividends payment on quarterly basis. Risk is and you can see the return here is for 1 year is 56%, 3 year almost 17%, 5 year 16%, 10 year almost 14%, and since inception in 2010, 15% average annual return. So that's actually amazing. Number stock 509 companies in this ETF, and the total net assets $690 billion, and net assets of 10 largest holdings is 27% of that. And you can see the portfolio composition here. Majority is information technology, but also healthcare, financial, and other sectors as well. And top holdings here, you can see Apple, Microsoft, Amazon, Alphabet, this is a Google, Facebook, Tesla, and so on. The fifth one is Nasdaq 100 index. My ETF winner in this category is in Invesco QQQ Trust and with the ticker QQQ. So let's see the brochure here. This index includes 100 of the largest domestic and international non-financial companies listed on Nasdaq stock market based on market capitalization, and expense ratio for this 0.2%. This is a bit bigger than previous one, but also very low comparing to other ETFs that are on the market. And here you can see the average returns, and for 1 year 48%, 27% for 3 years, 24% for 5 years, 20% for 10 years. Okay, guys, now I'd like to show you a comparison table that I mentioned at the beginning of this video. And now you can see 5 ETFs that we discussed in this video in one table. Each column represents one ETF. So let's start from expense ratio. The cheapest one is VTI and WU. Average volume. So this, for example, the most liquid one is QQQ. You can see that all of them pay dividends, and the amount is between 1 and 2. And that's amazing. We can see how much you can get if you invest $10,000. And the winner here is QQQ. If you invest 10 years ago, $10,000. Now you will have $61,000. And the second and third one is VOO and VTI. Okay, so you can pick one or few ETF to start with small and continue to build your portfolio. I personally invest in VTI and QQQ. Very important to remember that past performance doesn't guarantee future results, and honestly, be ready to lose all your money. If you are still here and made it to this point, then you're probably interested in knowing more about investing. And since you are interested in that, then you probably want to grow your portfolio. So check my other videos where I show you my top list for growth-oriented and dividend-oriented ETFs. Make sure that you click on that right now, right here. Thank you so much for watching. I will see you next time.